everybody. Welcome to the channel. So, today we are going to be talking about avoiding these 5 credit card mistakes. All right, let's get into it. So, the first credit card mistake is overspending and impulse buying. So, beyond the immediate thrill, impulse buying and overspending can wreak havoc on our financial stability. But it doesn't stop there. Overspending can take a toll on our emotional well being as well. We uncover the stress, guilt, and anxiety that often accompanies these habits, which can strain relationships and undermine our overall happiness. So, we have all been there before, buying things we don't need. We may see a car we like and we want to purchase that. We don't need it, but we want it. We may decide to go on an impulsive shopping spree, spend hundreds, if not thousands of dollars on wants, not needs. So, we want the latest technology, cell phones, computers, smartwatches. But again, we don't need these items. So, some solutions to avoid this: create a budget and stick to it. Establish a budget is essential for managing your finances effectively. Determine your income, fixed expenses, your savings goals, and allocate a specific amount for discretionary spending. Regularly track your expenses and make adjustments when necessary. By having a budget in place, you'll have a clear picture of your financial boundaries and be less likely to overspend. Also, something that I suggest is make a shopping list and stick to it. Before heading out shopping, whether online or at a physical store, make a detailed shopping list. Include only the items you genuinely need or have planned to purchase. By following that list, you can stay focused and avoid getting swayed by tempting offers and unnecessary items. Stick to your list and you'll be less likely to give into impulsive buying tendencies. I used to be very impulsive, buying tons of items I didn't need, so this used to be me 100%. Reason number 2 that you want to avoid: maxing out credit limits. So, maxing out your credit limit means accumulating a significant amount of debt. So, this debt can quickly spiral out of control, leading to high interest charges, late payments, and a diminished credit score. It becomes harder to manage your finances and make timely payments, potentially trapping you in a cycle of debt. Also, maxing out your credit limits increases your interest and fees. So when you reach your credit limit, any additional charges will incur higher interest rates and fees. These costs can accumulate rapidly, making it very difficult for you to pay off your balance and leaving you financially strained. The interest payments alone can eat away your income, preventing you from reaching your financial goals. And then lastly, maxing out your credit limits will impact your credit score. So your credit score plays a vital role in various aspects of your life, including purchasing loans, renting an apartment, purchasing a home, purchasing a car, or even getting a job. So maxing out your credit limit will significantly lower your score, making it a challenge to access future credit at favorable terms. And again, this used to be me before too. Uh, Getting credit cards, being irresponsible, constantly maxing out the limit, buying silly items that I really didn't need, that weren't going to benefit me. So, solutions to this: pay off your balances regularly. Aim to pay off your credit balances in full each month. This is key. By doing so, you avoid high interest rates and prevent debt from accumulating. If payment in full is not possible, make sure to make more than the minimum payment to reduce the overall debt, and prioritize your debt repayment. So if you're already maxed out on your credit cards, create a repayment plan. Focus on paying off the credit card with the highest interest rate first while making minimum payments on the other cards. Once the highest interest rate card is paid off, move on to the next one. All right, mistake number 3: ignoring credit card statements. So, one of the primary reasons to pay attention to your credit card statements is to identify any fraudulent activity. Be careful reviewing each transaction. You can spot unauthorized charges or suspicious purchases. Okay? Promptly report such activities to your credit card provider can prevent you from becoming a victim of identity theft or financial fraud. I was a victim of financial fraud. I had somebody purchase credit cards into my name and social security number. They had access to my information. So I got into the habit of reviewing my statements regularly. Also, in our increasingly digital world, subscription services have become a common aspect of our lives. Ignoring credit card statements means potentially missing out on identifying recurring charges for subscriptions you no longer use or need. By staying vigilant in this process, you could easily identify these charges and cancel any unnecessary subscription, saving you money in the long run. So, my son had a cell phone many months ago that I had automatic payments going to on a specific credit card. About 9 months later, I was looking at the statement and I noticed I was getting billed $35 every month for the past 9 months on a cell phone that didn't exist anymore. So pay attention to those statements. So, some solutions to this: set up a account notification on your credit card. So, most credit card providers offer account notification services that can alert you via email or text message whenever a new statement is available. By enabling these notifications, you'll receive regular reminders to review your credit card statements promptly. And this is something I get on my Amex, my Navy Fed card, Discover card, all my cards. Another thing you can do is create a monthly reminder. Set a recurring reminder on your phone or calendar to review your credit card statement on a specific date each month. Treat it as financial responsibility, just like paying bills, and make it a priority to stay on top of your credit card activity. And then lastly, allocate some time to review your statements. I usually review my statements during my lunch break. Uh, you know, Whatever time you have, find time, make a specific time, and take this time out to review your statements. All right, mistake number 4: making minimum payments. So, making minimum payments on your credit card, loans, or whatever debts you have, could be student loans as well, uh, may provide temporary relief by reducing your immediate financial burden. However, it's important to understand that the true cost of this approach, by making only the minimum payments required each month, you're essentially prolonging the time it takes to pay off your debts, and in turn accruing more interest. And we talked about the interest trap a few slides back. So, one of the biggest downsides of making minimum payments is the interest trap. Credit card companies and lenders will love to charge you interest on the remaining balance, which means that a significant portion of your payment goes towards interest rather than reducing the principal amount. And that is key. So, some solutions to escape the clutches of minimum payments, it's crucial to take proactive steps. This includes creating a realistic budget, which is what I've done, prioritizing debt repayment, another thing that I've done, and considering strategies like the snowball or avalanche methods to pay off your debts faster. Exploring options such as debt consolidation or seeking professional advice from financial experts can also help you regain control of your financial situation. So whatever your situation is financially, you may be in serious debt, hundreds of thousands of dollars of debt, or maybe you're in a few $1,000 debt. Whatever it is, find out what works best for you and be proactive. Mistake number 5. This is the most critical in my opinion: missing credit statement due dates. So one of the immediate effects of missing your credit payment due date is is late payment fees will happen. Okay. Credit card issuers and lenders often charge a penalty fee when you fail to make your minimum payment on time. These fees can range from a fixed amount to a percentage of the outstanding balance, depending on the company. Over time, these additional charges can accumulate and significantly impact your overall debt. Also, increased interest rates. So, another consequence of missing credit card payments is the potential for increased interest rates. If you consistently miss payment due dates, your credit card issuer or lender may view you as a higher risk borrower. As a result, they may raise the interest rate on your credit card or loan. Okay. High interest rates mean more money spent on interest charges over time, making it harder for you to pay off your debt and potentially prolonging your repayment period. And I talked about this a little bit earlier. Okay. You don't want to be paying high interest rates on any balance that you have. And then lastly, negative impact on your credit score. So your credit score plays a crucial role in your financial life. Everybody on this channel knows that. Late payments can have a detrimental impact on your credit score. Payment history contributes to a significant portion of your credit score, and any missed or late payments are reported to credit bureaus. So if you miss a late, you make a late payment or miss a payment at all, what will happen is that late payment will be on your credit report for 7 years, and that is incredibly damaging. You want to stay away from that 100%. So no matter what you have to do, You want to document in a notebook, in Excel, on your phone, planner, wherever you remember your payment due date. And do not miss this date. Whatever you have to do, never ever miss a payment due date. Okay? Missed payments on the credit cards, loans, mortgages. Again, any late payment can remain on your credit report for up to 7 years, and this will drop your score significantly. I've had a 60, 70 point drop before. I've had a 120 point drop before for having late payments. Do not make late payments. Do not miss payments. All right, everyone. Thank you for taking the time out to watch this video. If you like the content and offered you value, please like, comment, subscribe, hit the bell notification. I'll talk to you later.